Your first 30 days as an insurance agent are going to determine whether you can build a career or whether you become another industry statistic. Most agents find out the level of activity that's required, the ability to persevere, may be more than what they bargained for initially. Unfortunately, most agents end up getting out of the business before they realized the career's full potential. So, we're going to touch on what an insurance agent needs to do within the first 30 days. So, activity, you want to make sure that you have a client engagement model. So, client engagement model, think of this as like this is the amount of times you want to touch base with a prospect or a sales qualified lead within the first 30 days. So, our client engagement model is 20 touch points within the first 30 days. Now, you can automate some of these touch points, like they could be through a CRM. 12 of our touch points are automated through emails, text, SMS, ringless voicemail. The other eight, we encourage agents to make 8 phone calls within the first 30 days, which is really not that hard when you think about it, right? So when you're first getting into the business, there's different lines of business, right? So you have life, Medicare, and ACA, or under 65 health insurance. So it's important that you focus on one, right? So if you're trying to do everything all at once, you can quickly become overwhelmed. Especially if you're trying to do Medicare and ACA, you could quickly realize all the certifications that are required for Medicare, and then pile that on top of the FFM and state exchange certs you have to do on the ACA side. You could get bogged down before you really get started. So I would encourage you to focus on one. If you're brand new to the business, you can get started in ACA faster. Medicare, it's a longer entry point. There's more certifications, more courses you have to take to get certified to be able to sell Medicare. So I typically would encourage people to start in ACA, and then obviously you can add Medicare after a year or two once you become very comfortable with the ACA market. Okay, so you have time or you have money. So time or money, this is going to determine a large part of your activity, right? So if you have money, you can buy leads, you can do paid ads, you can do mailers, the list goes on, right? You could do networking groups, like BNI. These aren't very expensive. So even if you don't have a lot of money, I would recommend these are a couple $100. BNI, those are popular ones. You have time, you can build centers of influence, right? You can reach out to property and casualty agents, financial advisors, people that work with the same sort of client base that you do. You can become a referral source for them and you can reciprocate that as well. You can reach out to business owners, right? You know, cold calling, that is obviously things have changed, right? Since I started, this still works. Picking up the phone still works. Even though you hear people say, oh, I don't answer the phone, I just text, this still works. I can promise you that. You can do press releases. You can do things like classifieds, like there's B leads. These are older leads that nobody wants anymore, right? There's a lot of different ways that you can start in the business, right? You don't necessarily have money. It does make it a little bit easier, but if you don't have money, you got to spend more time. Okay. Deep versus wide. So you want to focus on one product. We touch on this in the line of business. So if you're focusing on under 65 health, you can see who the top 2 carriers are in your market. Or if you're in a market that's dominated by one carrier, let's say they have 70% or more of the market share, I would learn that product, learn the one product. Okay. And then learn an ancillary product to go with it. These under 65 ACA plans, very high out of pocket exposure. You can add in critical illness plan, the hospital indemnity plan to help out the client and kind of mitigate some of that exposure, as well to help offset some of those indirect costs that come from these events that typically lead to high not only high medical bills, but high indirect costs, not being able to work, those things that people don't typically think about. So you want to go deep versus wide. A lot of times, some agents will feel like they have to know everything before they actually get started, and that is a big mistake. Okay, first enrollment. This is post license, right? Once you're licensed, if you can get that first enrollment in the first 2 to 3 weeks, that is going to increase the likelihood that you stay in the business because it does a few things. Number one, it shows that you put in the time necessary, you generated the activity to lead to that first sale, that first appointment. You're going to, stay motivated, stay energized. You'll know what it's like. Okay, I can do this, right? And you learn, all right, well, this isn't rocket science. Okay, you got to be able to track your activity. This is a big one for new agents that start with us. Like we typically want to target 2,400 dials, right? 2,400 dials. You'll need 600 people to call. If you plug that in to the client engagement model, 600 people make 2,400 dials. Typically, on average, every 30 dials, will get you one appointment, right? So 30 times 80. So you get 80 appointments over the course of, this is 30 days, over the course of a month. You break that down into a week. I'll give you 20 appointments a week. When you're brand new, you'll probably need 20 appointments to see 12. That'll get you 12 presentations. You'll get better at setting appointments over time. But when you first start, you might see around half. So 12 presentations, you should be able to sell at least half of those folks, right? So that'll give you 6 sales. And this closing ratio will go up. But, half of the time, 80% of the time, people are going to be like qualified prospects, right? Especially as you learn to dial, you learn to set appointments. There's folks, and then you can say, okay, there's two extremes. You have 20% of the people are just never going to buy because maybe you didn't qualify the prospect right, maybe they can't afford it. You didn't go through that when you set the appointment. There's another 20% at the other end. They might not buy because they don't like you, whatever the reason is. It's so 60% in the middle. It determines like how good you are at doing needs analysis, finding a solution for what that client's specific needs are. So you should be able to get to about 6 sales out of that 12 presentations. That'll go up, right? So we tell people like, hey, if you can get here, right, in the first 30 days, might go up to 8 after 60 days. And if you can do that with 1,000 dials, fine, right? But you have to set this activity level high so you can get the data to know what your appointment set ratio is, what your closing ratio is. And you can track that over time and improve it. If we know, okay, somebody made 2,400 dials, we said 30 appointments, and they had 5 presentations, well, we know what to fix, right? If you said 10 appointments, you have 9 presentations, you have 2 sales, again, we know what to fix. We know what to fix if you're tracking it. You'll know what to fix. You'll know what to improve on if you're tracking it. That's why the tracking is so important in the first 30 days. So building the right habits, tracking the right things, learning one product, staying focused. These are the biggest things for a new agent in the first 30 days.